Hey friends, welcome back to the channel. I'm Iggy, and usually we're diving deep into long-term strategies. But today, we're hitting pause for something urgent. A major piece of news just dropped. Business Times just revealed the 10 best performing STI stocks for Q3 2025, and some of these numbers are absolutely stunning. This isn't just another headline, it's the kind of news that can send ripples directly through your SGX portfolio, fast. I've sifted through the noise, and I've boiled it down to 7 crucial points from this analysis that you absolutely need to understand. Forget the jargon, forget the endless paragraphs. I'm going to break down these key takeaways, and more importantly, immediately tell you what they actually mean for stocks you own or are watching, right here in Singapore. We're talking about real-time impact, real-time insights right now. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also focus on regional and global economic trends. If you want to stay ahead of these rapid market movements, stick around for my immediate take. Let's jump right into this. The first critical point from this Business Times report is that the STI has jumped about 14% this year, with new government equity stimulus measures playing a major role. So what, you ask, for Singapore? This isn't just government cheerleading. This $5 billion equity market development program just allocated its first $1.1 billion to 3 asset managers in July, specifically targeting small and mid-cap stocks. What does this mean for your holdings? It means government money is actively flowing into SGX stocks, creating real buying pressure and liquidity that wasn't there before. Think about how this creates a supportive environment for the entire market, not just the big caps. The second key takeaway is Yangzi Jiang Shipbuilding absolutely crushed Q3 with 47.7% total returns, making it the top STI performer. For a trade-dependent economy like Singapore, this is significant. The company posted record H1 earnings of 4.2 billion yuan, up 36.7% year on year. Does this signal a broader global shipping and manufacturing recovery that Singapore can ride on? It's certainly a hopeful sign for our export-oriented businesses and marine engineering sector. The company has a dividend yield of 3.7% and a market cap of $13.3 billion. Moving to point number 3, we saw property developers like CDL surging 33.5% in Q3, taking second place. How does this hit home for us? CDL's H1 net profit rose 3.9% to 91.2 million, driven by stronger property development contributions. But it might present headwinds if interest rates stay elevated longer than expected. Are your favorite property stocks ready for the shift? Private home prices rose 1.2% in Q3, with the transaction volumes jumping 29% quarter on quarter. This suggests genuine demand, not just speculation. For even more detailed charts, the full official report breakdown, and my exclusive commentary, make sure to check out our Substack link below. It's where I put all the extra facts and figures for you to dig deeper. Point number 4 from this analysis is DFI Retail Group and Jardine Matheson both posted over 31% returns, ranking 3rd and 4th. For Singaporean investors, this has a dual impact. DFI's underlying profit rose 38.9% to US 105 million in H1, driven by lower financing costs and improved health, beauty, and food segments. If you hold retail REITs or consumer stocks, you might be seeing a currency tailwind from stronger fundamentals. But is it sustainable? The retail sector's resilience despite economic headwinds is noteworthy. And our 5th crucial point today is technology and financial blue chips like Venture Corporation, Singtel, Keppel, and DBS all made the top 10 list. Singapore, as a financial and tech hub, is highly sensitive to global interest rate movements. DBS hit an all-time high of 52,087 in September, with the stock up nearly 20% year to date. Are our local tech and banking giants prepared for potential interest rate volatility, and how will this affect their profitability? DBS's share price rally is driven by robust H1 earnings, with net interest income rising 3.2% to 7.3 billion despite margin compression. Point number 6 is interest rate dynamics are creating winners and losers across sectors. Singapore REITs have rebounded 9% since July 2025 as interest rate expectations shifted. The 10-year Singapore government bond yield declined to 1.77% from 2.92% at the start of 25. What happens to REITs in your portfolio? Lower financing costs are starting to show up in Q2 results, with analysts expecting 2 more rate cuts in 2025. This could lead to increased REIT valuations and better dividend sustainability. And finally, our 7th crucial point today is the launch of the iEdge Singapore Next 50 Index in September, tracking the next 50 stocks outside the STI. This is part of Singapore's broader value unlock package aimed at improving market depth and liquidity. What does this mean for smaller companies you might be watching? It creates new benchmark indices that institutional investors can track, potentially bringing more capital to midcap stocks. This structural change could reshape how investors view the entire SGX ecosystem beyond just the 30 STI names. So, that's my immediate take on Q3's STI top performers. The key insight here is the interconnectedness of our market. What happens with government stimulus, whether it's this $5 billion EQDP or interest rate shifts, has direct, tangible effects on Singaporean stocks and your personal portfolio. My quick piece of advice: don't get caught off guard. These Q3 results are not just headlines, they are market movers, revealing which sectors have real momentum. Stay agile, stay informed, and always consider how sector rotations and policy changes filter down to our local SGX. In today's fast-moving market, staying on top of quarterly results with solid analysis is absolutely critical. If you found this quick breakdown helpful, please give us a like, share this video, and subscribe to the Investing Iguana channel so you don't miss our next urgent market commentary. And for those who want to be truly ahead of the curve, our premium members get exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's real-time reactions and urgent insights on major market shifts directly to your inbox, giving you a significant edge. It's just $3 a month, about the price of a cup of coffee. Think of it as your daily dose of market agility directly from my desk, giving you the jump on everyone else. Ready to stay ahead? Just click the link in the description below to become a premium member today. Before you go, if you want a deeper dive into understanding how government stimulus impacts the SGX, check out my video, Singapore's $5 billion equity program, What Investors Need to Know. You'll find the link in the description.